Yes, we come again at a demo consult. We are bringing you CTA, CPA, deed and tenancy, and today we come to answer some of the questions that we have been getting from some of our clients, those who are in real estate business. And the question is, if I'm in real estate business, what are those taxes that the government expects me to pay? Now, that's what exactly I come here today to answer. If you are in a business, you are buying land and assets and you are selling, then the starting point is that you have to pay what we call income tax, because by selling these assets, whether it is land or a building, you're actually earning. So the first tax that the government expects you to pay is income tax. But also remember, as you are trading, you have to transfer these assets from one owner to the other. Now that calls for what we call stamp duty. So it is the second tax that the government expects you to pay. Then if you are now dealing in what we call business assets, then that takes us into what we call value added tax. Now, value added tax for real estate businesses, we have to first differentiate between developed land, for example, if you are dealing in land, and non-developed land. Now, here, there is a very thin line between what the taxman calls developed land and actually what you as a real estate developer or a real estate dealer call developed land. So you must really be sure about what we are talking about. So in case you are dealing in what we call developed land, then the taxman expects you to charge what we call value added tax. So don't forget about it. I have seen in several instances, you are actually dealing in developed land, you said it without charging value added tax, and the value of the land is actually above 150 million. So by all means, you have to charge value added tax. If you have not charged it, then automatically along the way, the taxman will actually assess you. Now, take caution of that. But also, if you are dealing in the properties that you buy and keep and sell after some time, there is what we call capital gains. That you have bought a property at 500 million, but by the time you sell it, you are selling it at 1.5 billion. So in effect, you have made a profit. So that profit also, the taxman expects you to pay a tax on the profit that you have made. So as a real estate dealer, a developer, appreciate the taxes. You cannot do away with taxes where we have reached. Pay your income tax, pay your stamp duty, pay your value added tax. Importantly, there is what we call withholding tax. If you are buying and selling business assets, then the 6% comes in. If you are selling a business asset, the buyer, the person who is now buying, is required by the tax law to withhold a 6%. That only applies if you are buying this asset from a resident taxpayer. In case you are buying an asset from a non-resident taxpayer, then again the law requires you to charge 10%. Many people have sold and others have bought, but they have not planned and they have not deducted the 6% or 10% after paying, or I mean before paying. So what normally happens is the taxman will use stamp duty payments to actually know who sold what asset to who, and the taxman will assess you the 6% if you are buying from a resident taxpayer, and if you are buying from a non-resident taxpayer, the taxman will actually charge you 10% when you have already paid years later. So plan accordingly, pay your taxes on time, and be a good citizen. Thank you.